Okay, recall that what is liability? It's outsider's claim, or you can say that liability is a debt. So a payable is always a liability. So whatsoever is payable, that is our liability. So the most common accounts for writing down the liabilities, one is account payable. Accounts payable include a promise to pay debt, and what is the life of the debt? Debt is less than 12 months. And what do we mean by notes payable? Notes payable means that you signed a note promising to pay in future. It's similarly like notes receivable, but in notes receivable you receive cash, and in notes payable you actually want to pay cash in future. So you said that you don't have cash right now, so you write down your company name and you sign and you say that I will pay you $200,000 with 5% interest after 3 months, and there's going to be a date. So in business practices, when you buy raw material, you normally, if you don't have cash right now, you issued a promissory note. And what do we mean by accrued liabilities? So liabilities that has accrued, that has occurred, but you did not pay yet. You receive the full benefit, but you will pay later. So for example, wages, it has occurred, the workers has worked for you for a whole month, but you still did not pay them. We call that accrued salaries or accrued liabilities. So all those payables that has occurred but you didn't pay yet, call that it's accrued liabilities. Other names are outstanding liability as well. In other books you will see the name of outstanding liabilities. Now the last part of accounting equation that we just learned, assets is equal to liabilities plus owner's equity. So what are the accounts that are created to record owner's equity? So owner's equity is the owner's claim on the assets of the corporation. So the company's insider claim or company's owner's claim on the assets of the corporate or corporation or company, we call that this is stockholders equity, shareholder equity, or owner's equity, right? So what do we mean by common stock? Common stock is the owner's investment in the company uh, through the ownership of stock. What do we mean by ownership of stock? You pay money and you receive a share or stock. We call that this is the common stock. So a corporation uses common stock, retained earnings, dividends to record owner's equity. So what do we mean by retained earnings? Retained earnings is the amount that a company retained in the business after distribution of dividend. So retained earnings is net income earned over the companies minus the dividend. And what do we mean by dividend? Dividend means the distribution of the money to the stockholders or shareholders, and dividend is declared by board of directors. For example, if a company earned $1,000 and the board of directors says for the next year we need 600 loan, so why we ask the 600 loan from the bank? Why not we just adjust our loan requirement, because loan has cost. And what cost? Interest cost. So how much is the amount left? So the board of directors will say that 400 we will distribute to our owners and 600 we invested in our business. So this is a prudent or smart decision to use your own profit for your future needs, rather you just distribute all your money to the owners and in future you ask bank loan or loan, and loan has a cost which is interest. The other two accounts that belongs to stockholders equity, one is called revenue and expense. So remember, these are not the part of balance sheet, these are the part of income statement. But these two accounts, revenue and expenses, they belong to owner's equity or shareholder equity. So just we will explore what is revenue. A revenue is basically increase in the stockholder equity, increase in the owner's equity from delivering goods or selling goods or services, right? And what are the expenses? Expenses means decrease in the stockholders equity due to cost of operating the business. Expenses that you sell the goods and services or you receive cash from business operation. Expenses is when you pay cash for business operation. Let's take a short while. I pasted this question just to make sure that you understand the previous concepts. So ideally I just want you to pause the video for a while and try to answer these two questions. So name the two things that increase whole food market incorporation stockholder equity and decrease the whole food market incorporation stockholders equity. So number one is that increases the stockholder equity includes sale of the stock and earning net income, which is when revenue greater than expenses. You earn net income. When net income is increased, stockholder equity increased. Second answer is decreases in stockholder equity include when you pay from the net income, your stockholder equity decreases, or when you earn a net loss, which means revenue is less than expenses. So here we go. Our third learning objective is show the impact of business transaction on accounting equation. So we already did assignment 1 regarding our regarding recording the transaction, but this chapter is basically the strengthening of your concept regarding our assignment 1. So you have already done assignment 1, and this part is basically the continuation of our assignment 1, and so that now you can have a 100% grip on the accounting equation. So we have example here, Freddy's Auto Service Incorporation. To illustrate the accounting for transaction, let's assume that Freddy opened Freddy Auto Service Incorporation in April. So here we go. Assets is equal to liabilities plus owner's equity, and under assets the accounts are cash, account receivable, supplies, land, and under liabilities we have just accounts payable. We have stockholders equity account include common stock and retained earning. So let's talk about the transaction 1, which is the Friday and a friend invested 50,000 to open Freddy's Auto Service Incorporation in return for common stock. So what's going to happen here? The business. Now we're talking about this is the business equation, which is the equation for Freddy's Auto Service. So remember, this is not just Friday, this is business, and business has separate identity. So when business receives cash, it means cash is increased 50,000 under cash against common stock. So here common stock is 50,000 as well. So did you notice this equation? Assets is equal to liabilities plus owner's equity is equal 50,000 equal to 50,000. So let's see that. Right? How about the second transaction here? The second transaction is Freddy's purchases land for new location and pays cash 40,000. So who received the land? Business received the land. Well, Business received the land. Land is a part of your assets account. So land increased by 40,000. Right? And what happened? You pay cash. Cash decrease 40,000. So thus this equation is balancing itself. Yes. 40,000, 40,000 cancel. Answer is 0 here. Right? So what is the second transaction is here. Third transaction, which is the business pays supplies on account. On account means that you are purchasing on credit. So you agreed to pay 3,700 within 30 days. So what's happening here? Remember, the transaction effect, the accounting records on both sides, giving side and receiving side, right? So company receives supplies, how much? 3,700. Does the company pays the cash right now? No, it will pay after 30 days. It means we have to create a liability which is called accounts payable, 3,700. So this equation is balances. Yes, it is. Here we go. Here. So similarly with the transaction 4, Freddy received 7,000 cash by providing services. It means Freddy performed sales oriented services. It's auto shop. Main revenue is service, auto service. So receive cash and sales is a part of retained earnings. Retained earning increased. Right?